Hinge Health and ad firm Mountain. Of course, we've had Mark Douglas on the show a number of times, making their public debuts, and both are popping right now. Mountain up 43% from its $16 IPO price. Hinge opening at 39 and change after pricing at 32. It's up about 17%. Today's activity comes as more and more brands could be looking to go public. Last week, eToro soared after pricing at 52, although the shares have been trading below the IPO price there since then. And fintech name Chime also announcing its plans to go public last week. So is the IPO market finally open, and who could be next? Let's ask Scott Raney. He's Redpoint Ventures Managing Director. Scott, it's great to have you back here. And what must be now a little bit more exciting times for you guys?
Yeah, it's a good day for us. A couple of bricks being laid in the foundation of rebuilding the IPO market. It's great to see couple of companies get off the ground. They're joining a set of companies that have managed to go public and have performed well in the public markets over the last 18 months. So it's really been more quality over quantity.
What happens now, do you think?
I'm really optimistic about what might happen in the second half of the year. I think that normally companies might go public coming off their audited Q1 financials. Unfortunately, we saw the tariff issue emerged at that time, which I think put a damper on the timing associated with a number of those companies. But there was a lot of activity. Bankers were very busy drafting with these companies. And so I think that now that there's a little bit more stability in the public markets, I expect that we'll see coming into, after Labor Day, see a lot more activity in the public markets.
But you think there's a reason why these firms are also performing well. Tell me more about Hinge Health for those of us who are unfamiliar.
Hinge is leveraging technology to essentially be able to provide access to physical therapy services for patients. They sell it to employers who then make this benefit available to their employees. And by providing this access through technology, they've been able to kind of transform what that space looks like and alter the economics associated with that. It's a compelling value proposition. They've been able to demonstrate some real results in improving outcomes for patients. So when I think you can couple that improved outcome with an attractive business model, you're going to see something like the performance of the stock today.
Do you think it's strange that we're not talking about all the hot AI firms going public right now?
It's too early. I think you will. And I think that's one of the reasons why I'm so bullish, even though we're at about a tenth the IPO volume we were 3 years ago and about similar to the years before that. I think that those companies are growing very rapidly. They're growing very efficiently. I think they're going to be able to meet that requirement of both growth and profitability. But we're still probably a year, 2, 3 years away from a whole wave of those companies going public.
What else is on, should we be looking for then? Mountain, of course, is an ad tech firm. Do you think it's going to be a lot of idiosyncratic names?
Yeah, I think that we've got a whole backlog of companies that are really attractive businesses. Klarna, StubHub, Genesis. There are a lot of great companies out there that are excited to be going public and have finally been able to provide that combination of growth and profitability. There's also companies like the big three that we always talk about in the private market, Stripe and Databricks and SpaceX, that will be monsters in the public market that so far have just chosen not to go public. They've regarded it as a strategic advantage to be private. But at some point, I think those companies will go public as well. And so there's a long list, I think, of really high quality companies that are brand names that we're all familiar with that'll be going public here over the coming quarter.